Let's get across the market open now. Jimmy Jang joining us from GBA Capital. Jimmy, welcome back. Look, a big day ahead, certainly as far as tonight's budget is concerned. But let's start with what we've seen on Wall Street. That momentum continuing, more record highs.
Absolutely, Andrew. Big day for domestically. Obviously we saw last night how those kind of, even though there's energy prices like oil prices have been moving higher again, obviously with those tensions between the US and Iran escalated, but the market seems to be slowly forgetting about it or don't really give too much input into how they make the decision now. So I think the market is beginning to kind of fully appreciate the vulnerability of global supply chains, and not just for oil and gas, but obviously the critical minerals that sits underneath a lot of those modern industrial economies as well. So, if you look at the S&P 500 now, a lot of these semiconductors, AI, and most importantly, those energy, companies has been breaking a record high again, even before the war erupted between Iran and US. So that's really promising to see. But, we also need to be wary that we got the federal FOMC meeting coming in ahead of us over the next few months, and we'll see how that decision will impact the market as well. However, the market seems to be regaining their confidence and really kind of focusing on a top-down approach now, rather than just really relying on what the oil price does at the moment, Andrew.
Jimmy, would you be exercising caution at the moment, given how far this rally has run? In fact, I note that when we take a look at Goldman Sachs, their strategists perhaps warning that you need to take a little more defensive approach here in case there's a sharp momentum reversal.
Absolutely. If this is not the time to, invest with caution, I don't know what other time will be the best time to do so. In a market like this, it's so thematic driven. So, some of the companies might be very well positioned with the earnings and very well positioned with the management, but just they might be just in a wrong sector at a wrong time at the moment. So right now, in-house, we kind of really like the energy and critical minerals. So we like the commodity. I'm not sure if the viewers might be too familiar with, but commodity like fluorspar, which is essential for semiconductors, electric vehicles, nuclear fuel processing, and aerospace alloys. So as you can see, like just by hearing it, some of these, large driver, even in the US and also mostly in Australia as well, are influenced by these, industrial materials that's largely dependent on China and most importantly over even US as well. So focusing on these kind of critical minerals and industrial materials that really drives the next 5 to 10 years is where the key focus is. And if you're not in that category, it's probably just best to drop it and then just keep that in cash for the time being. So definitely be on the caution side, Andrew.
Yeah, Jimmy, I mean, a different story what's panning out locally, more company downgrades. Goodness, yesterday we got CSL, that has just gone from, it's just got worse, hasn't it, essentially?
It's been a screaming sell ever since they divested their the business into the U.S. equity. And look, it's so difficult to really expect what can the company do, and it's so now driven by the management. So it just kind of goes back to that caution side, Andrew. That when the macro is giving the biggest headache for a lot of the Aussie investors, the last thing we want to be concerned about is the management itself as well. A lot of those companies that's been performing really well, even though the macro hasn't been supporting them, but purely because of the management, they kind of obviously survive these kind of thematic. However, when the management do silly things that the investors don't want to see, that you get punished straight away by the market. So it's been an absolute sell for me for a long time, and a lot of people has been following that order as well.
So let's look at some opportunity then, Jimmy, locally at least. Now the stock you're focused on is Evian Group. So this is a graphite developer. Tell us a little more.
Yeah, so what kind of Envian Group is really unique for is their vertically integrated critical minerals platform. So they got that Madagascar asset in a graphite asset in Madagascar. They also have the Panthera Graphite Technology JV exposure, which is an operational expendable graphite processing facility. They also supply those non-Chinese graphite products to one of the largest buyers in the US as well. And they're on a trading halt today because they just just completed a capital raise for an exciting acquisition of a fluorspar asset in Nevada as well. And this kind of goes back to what I was saying about the critical minerals and why it's so, important for investors to watch why certain critical minerals run, because like I mentioned, critical fluorspar is essential for semiconductors, aerospace, and also in defense, which are all the thematics that's really driving all the growth in the US at the moment. And US imports about 400,000 tons of domestic fluorspar annually, but they are 100% dependent on the fluorspar import at this stage. Now, Mexico is currently the dominant supplier into the US, and obviously China, it controls about 65 to 70% of the global supply of fluorspar, but they themselves are the biggest importer of fluorspar as well. And also they're obviously tightening their environmental regulations and shifting to those kind of domestic consumption. So we've seen what happens when, let's say, for example, China becomes the dominant supplier in a single commodity, like rare earth, for example, a few years ago, where how quickly the government changes their stance to, diversify that risk of, monopoly supply of a single critical minerals. That obviously drives the economy of the US, which right now is the AI and chip makers like, NVIDIA as well. And most importantly, there we saw the US Defense Logistic Agency awarding close to $169 million fluorspar related contract to one of the domestic fluorspar producer in the US as well. So I think this is a very exciting space to watch right now. And on top of the fluorspar, those Madagascar projects that the market's been pricing potential good news coming should also flow through. So definitely something to watch out for this morning.
All right, so that's in your portfolio. What else have you added recently, and perhaps what have you taken out?
Yeah, at the moment, we really like I said, MVN Group has been one of the biggest buying that we've done in the recent time. But most importantly, another major, companies like Northern Star has been a pretty attractive trade for a lot of people as well. But gold and precious metal is just so difficult to find any ground right now, because we potentially will see a lot of the global central banks hiking the rate, and I'm just not sure how much more the gold prices or silver prices will run from here onwards as well. But there's another really good names like PR1, for example, which is done a capital raise a few months ago, and they're in that really big exposures into the semiconductors at the same time as well. So I think right now you're kind of following what the US is trending. So anything that's related to the semiconductors and energy costs, even like having some small exposures like Karoon Energy or Viva Energy is not the worst idea to do right now, just because how volatile the energy costs are, to kind of hedge off the equities at the moment. But another big runner in the commodity side is Bitcoin as well. So Bitcoin has recovered significantly, even though it's a risk-off asset. But even with this tensions growing between Iran and US, Bitcoin seems to find a bit better balance than a lot of the commodities out there. So it's right now more so commodity focused. So you got to be really, really in the right commodity at this stage. But if you're not, the companies, even though they're performing well, just won't perform because the market just won't like it.